Happy Saturday, traders. Todd here of Inside Edge Capital. This is going to be a video update for Active Opps and Savvy Trader. I'm here Saturday. Did a little soccer coaching this morning. The Yanks just started against Toronto. They got killed last night. I think I can actually kind of using the iPhone camera, and it follows you around. It's pretty cool. Watch this. Yeah. Pretty cool, huh? I switched over a Mac from PC, so it's something I've always wanted to do. No more PC. It's been a little bit of an adjustment, but so far I like it. It's all good. So if you have any questions about that, let me know. But there's a lot of upsides for it. So I want to go over, this is the first of what should be a weekly video for Active Opportunities. Active Ops is a portfolio that we offer at Inside Edge that I will show you here. So insideedgecapital.com, and you go to active management. So it's that's my buddy Vaughn, who this is him in the Olympics. We raced together in college. Story for another time. So these are the models that we offer at Inside Edge. So Active Ops is what we're going to discuss here today. TAG, that is our sort of flagship growth portfolio. SIG is dividend. We have sector rotation. We have fixed income. We do custom hedging. So these are, what we do is we combine based on a financial plan and an assessment of an investor's risk tolerance, goals, etc. We construct different allocations to these portfolios. So what we're doing here on Active Ops, which is right here, it's got a double diamond risk profile. A lot of people know me from the old world at Trading Analysis, where let me just go back over here, where I would do pretty active, I would say, swing to position trading in stock and options. And I did that since 2012, and we just shut the doors last month, right? And the idea was to transition over from research into money management. It's something that I always wanted to do. So that's what we've done. But I'm always going to be a trader, and I have a lot of clients who, they're not ready for a wealth management relationship, or somebody else is taking care of it, or they do it themselves, but they still want to have their hand in the market. And a lot of the clients that we have at Inside Edge also keep a percent of their money to trade, or they turn it over to us, which we do trade in Schwab's institutional platform, which is called ThinkPipes, which is based on Thinkorswim. We do actively trade that money. So it's a way for me to keep my hands in the markets, because I'm always going to be a trader, while letting TAG and SIG, the growth and dividend equity portfolios, work on a longer time frame. So that's what we're doing here. That's kind of how it all ties together. So just to give you a little background on that. All right, so let's go back in here. All right, so I'm just going to show you, the portfolios. Just bring over Savvy Trader. Now, Savvy is a third-party company that I came across that has basically taken care of all of the technology needs that I used to have at Trading Analysis, where it'll aggregate all of our positions, it'll keep track of performance, sends out a push notification. I'm looking for my phone. Of course, my phone is my camera now. It'll send out push notifications on their app, SMS, when we make a trade. It's just wonderful. So every time we make a trade in Active Ops, which again is it's a live money management account that I run through ThinkPipes, I'll put it on Savvy Trader. So you're viewing this video. I'm going to put this out publicly, and I don't mind sharing the positions. Like, they're going to change and they update. I'm going to be doing weekly videos on the Active Ops model, which again is one sleeve of the 3 individual equity models or portfolios that we offer at Inside Edge. And basically we're sharing, the positions with you just like we did at Trading Analysis. I used to do a video daily. I'm not doing that anymore. That's for sure. But we'll get it out once a week. So I want to just take you through the markets. I'll show you the positions. Here they are right here. And these very much reflect the actual positions that we have over on ThinkPipes on Schwab with our RIA, which is the Registered Investment Advisory. Okay. So there's a few notes I want to take you through. But first, I think one thing that, we should talk about, I was on CNBC this week talking about how to hedge with a possible sell-off in the market. And we're talking about, doing VIX call spreads. So yeah, I'm watching the market seasonally. This is the weakest month of the year. September is the weakest on average. We have a Fed that's going to be cutting rates. They're even starting to price in 50 basis points on September 17th, which I don't think is going to happen. I don't think the Fed's going to do that. That would signal, I think, that the market is weaker and the economy is weaker than we think, and we have seen a slowdown in hiring on the employment side. So, is the market telling us the economy is slowing down, or is just inflation mean reverting, and all the technology, the AI build out is displacing workers and making companies more efficient and doesn't have a need for so much employment? That's a debate that, we can certainly have and probably won't learn the reason for some time, right? So I think, let's look at the technicals of the market. And to appease sort of the people who know me from the old days, I'm trying not to do too much Elliott wave. It's subjective. It's creates some confusion for people, but I'll keep an eye on it. So the one thing that I am watching here is, could this, in the S&P 500 here on the daily, could this be something called an ending diagonal? And I'll assign some starting and stopping points here to help give you levels to watch out for, I would say. An ending diagonal is kind of like an ascending wedge pattern. So you would look at it as a 5-wave move. I think it would be 3 up here for wave 1, and that was going to end here on July 31st, right there. Okay, there's wave 1. So it's ABC up, down in 2, ABC in 3, down in 4. Are we going to get another ABC in 5? And then if that's the case, if it's right, maybe then do we see, where's my arrows? Should be here. Then are we going to see, boom, on down? Okay. So there were some fib relationships between these swings that I found interesting. So if we just go here, trend-based extension. So, if you look at, this would be ABC up in 1. So if you take the distance of 1 and you do a fib projection on it, you're going to see that, actually, no, I was going to do it from here. Sorry, that's wrong. It would be ABC like this. Yep, ABC right there. So that's what I was looking at. You're going to see that there is, from here, a pretty good 0.618 relationship. So what that means is, if you take the percent distance traveled in this guy, multiply it by your fib level, 0.618, that's going to be the high right there in wave 3. Then we drop down in 4. Is there going to be another 0.618 relationship for wave 5 or 3? So what you do is you start at the beginning of wave 3 to the end of wave 3. Then you click the end of wave 4, which is down here. I'll pull it across. 0.618 is at 653, which is right here, which was actually the top yesterday as the market then sold off. Okay, so we don't have to stop there. We could go up and test the 100% at 665. If it goes above this, based on the Elliott wave theory, which again, I don't want to get too much in the weeds with it, this assessment is no longer valid. Okay. But if we were to rally up and go into the 665 and then start to fail, that starts to bring this ending diagonal pattern alive. Okay, so what that all basically means is let's be on guard for a potential resistance in this zone right here, in this gray box rectangle that I just put out there. Okay, so let's just keep an eye on that. Okay. So, if that's the case, how far could the market go? Well, I did say in that CNBC interview, we would look to do something like a 20-25 VIX call spread. And that's something that I will put in Active Opps. I do have, as of now, I do have a VIX call spread in Active Opps that expires the monthly expiration for September. So I'm probably going to lose money in those. That's fine because it let us, stay in all the positions we're in. But, if we start to show some hesitation in that zone that I just mentioned, I will put the 2025 VIX call spread that expires in, I'll price it out in either October or November. Okay. So let's go back. I get a few other notes, a few other things I want to talk about. S&P. Okay. So other things we want to talk about is two of our positions that we hold in Active Opps, Robinhood and AppLovin, were added to the S&P on Friday. So Robinhood, we have a 5.8% allocation, total return. Robinhood right there. Total return is 101%, 0.47, up 51,900 on that. APP is a new position. We had it and I cut it. And I think, yeah, Savvy Trader will actually give you the details on that, which is awesome. So I bought it on May 2nd. I paid $307. Sold it on June 20th. There was news on AppLovin that there was some undisclosed Chinese ownership by some short selling research letter, and it gained a lot of traction. So, I didn't like it, how it was acting. So I cut it on June 20th at $332 for 8.81% gain. And then I had to get back in significantly higher. I got in August 28th at 482. Okay, so not good management there. But, what's happening is after the news that App and Robinhood were added, they went pretty bid after hours. So let's take a look at that. So here's Robinhood. I'll give you the after hours look here. So that was the jolt that we saw Friday. So this was the normal Friday New York session. News came out about 5 o'clock and went from 100 to 111s, backed off to 107 after hours on Friday. Okay, so if we just look at that, how Robinhood in general is acting on the weekly, it's been a really good move. We've had Robinhood long since this breakout right here at 50.26. So that's why we're up, 100% on this position. But, I do like the resistance that was broken in Robinhood. This was the post IPO print high at 83, 84 area. And we just broke above it very well. Was that earnings? June 30th, April 30th, and then July 30th. So July 30th was right. Usually Deep View should label earnings. Sometimes it works and sometimes it doesn't. So there's earnings there. Okay. So I don't think there was a news that there must have been something on that massive volume break out there in Robinhood. Maybe it was, they were like the tokenization of some securities. That I know that was a big news event in Robinhood as well. But, we're doing sort of a little bit of a rounded top here. But I think while we're above that post-IPO high of 84 and change, I think we continue to look good. Like I said, we're 107 bid after hours, 107.33 following the news that it's added into the S&P. So if we could, if this is all the consolidation we need to see, that's fine. You know, I could even from an Elliott wave point of view, actually, I don't see an Elliott wave count there. Doesn't matter. Just a little pullback, as I said, from resistance. That's now support, and we should be able to push higher. So all good there. Let's take a look at APP. App loving right there. So yeah, this one's been busy. This one's been busy. Here's the after hours move in APP. So we went from 493, shot up to 535 or 521. You know, an APP looks good. I would say, just looking at volume, huge volume push there on August 7th. That would be earnings right here. They reported 249. The estimate was 2. It was a 25% surprise, 113% year-over-year growth from Q2 of 24, 16% revenues, 1.22, and they put down 1.26. So nice quarter out of APP. Obviously, we have a breakout pending from the high here on February 10th. So, you know, we get a little bit of a breakout there. That's going to be good. You know, when I see a pretty good deep correction like that, I like to look at the prior trend, and I'll do a little fib study on that to give us an idea of how far that might be able to go. So you take your fib extension tool, you click the beginning of the move, the end of the move, and then down to the end of the correction. It's a 3-click tool. Now, it's interesting, if you take the percent distance traveled there, whatever that is, you multiply it by 0.618, that was the high right there. So we backed away a little bit, and then we're going to be obviously coming on with the addition to the S&P. If we break through the 0.618 projection as well as the old high from February 25, it's not unreasonable to say that, you know, might get 100% projection at 681. The other thing I like to do is take a fib extension of this big drop here. So what you do is you take your retracement tool, and I'm wondering if it's close to the 1272, and oh, it sure is. Yeah. So the way that works is like, this is a discussion for another time, but see how that's the 78.6% retracement of this drop? There's a pretty good guideline when you don't, so we reverse perfectly there, but when we come back to it for a second test, not only are we probably going through the 100%, but there's a good indication that you're going to go hit the 1272. And again, that's a conversation we can have another time, but there's a nice confluence of two pretty significant fib levels right here at about 677 in APP. All right, so let's watch that. Gap. Okay. Also, I wanted to talk about Rocket Lab. Rocket Lab has been, let's see, Rocket Lab pulled back to the 50-day moving average. It was looking a little weak. I did a CNBC article about Rocket Lab, where, you know, we're quite a ways from GAAP profitability. Non-GAAP profitability, I believe, is expected in 2026. I think DeepView is showing us GAAP earnings here. They're expected to lose 17 cents next year. But still, I mean, this is, you know, the second most busy commercial and, you know, passenger, I guess it's more commercial and defense focus of space launches behind SpaceX. So the company is quite progressive. They're doing pretty amazing things. And they're being contracted out by some pretty significant corporates. So there's a lot of interest here. And of course, the race to space is the key for, you know, not only transport, but communications and as well as defense. So I like this name. It was a pretty good sell-off here on September 3rd. Today's the 6th. So what is that, Thursday-ish or Wednesday? But we came down to the 50 period moving average. That's the distance from the 50 right here. Held it, rallied back. Not great volume yesterday, but decent. I'm going to hang in there to Rocket Lab. So RKLB, we are up 23%. We're long from, that should be the entry there. Average cost, RKLB 37.19. You're trading 45.84. So we have a little bit of cushion there, but I don't want to see it go back and retest the 50 period moving average. Okay. All right. So that's that. I also want to look at CRDO. This one is absolutely ripping. reported earnings, just crushed earnings. Estimate 21 cents, put down 52 cents, 148% surprise, and it was a 1,200% quarter-over-quarter growth of the same of the prior year. Revenues $233 million, beat by 17%, and year over year 273% growth. So just absolutely ripping. This is one of the leading semis right now. So we have a nice, I would say this is considered a breakaway gap here on massive volume. The earnings were September 3rd, which is going to be right here. And this is one discussion I wanted to have, and I kind of go back and forth. I'm curious what your thoughts are on this. I like the charts in here because they give you the choice to call this bar either a red close or a blue close. And what I mean by that is it's the settings that I have right now are colors based on the previous close. So I would consider, I think of whether a bar or a candle should be marked up or down on the session based on where the closing price is relative to the prior day. Prior day was here, earnings here. That's a massive up close. Okay. And, I think I know the traditional way to look at that is because we opened here post earnings, but then had a little bit of profit taking, not acknowledging this gap is going to mark it as a red close, as a negative close. I'm like, I don't like that. I want to look at today's close versus yesterday's close. And if you go colors based on previous close, it'll mark it blue. Now the volume should also be reflecting that. Instead of a big red volume candle here, which you might say, oh, wow, there's huge distribution here, right? That doesn't make any sense because we had a massive earnings gap up. The company beat by 148% expectations, 1,200% quarter over quarter growth the same year. So I don't like that. And I think what you can do is color based on the previous close. So now you have, that tells a different story. Even though there's a little bit of fading from the gap, that's a strongly positive close. And that's what the volume looks like now. Okay. So I really like having it based on the prior close. And I think, you look at that volume clustering there above the 50 period moving average, that's massive accumulation in CRDO. Okay, so average volume over the last 50 days, this is right from IBD, 4.73 million on average. We're doing 6.25. We did 9.9. Volume day was 14 million shares, and yesterday we did 7.2. So there's serious accumulation in CRDO. We are holding that. Up 78%, average cost at 79, or we're at 140 now. So, we have a good sized position. It's an 8.23% position. I wouldn't mind pushing that up to 10, 12% or so. I don't want to get crazy. Again, this is money that investors have in with us that we manage. I am not going to get crazy and go, like the Investors Business Daily, like Bill O'Neill, where they'll go 3, 4, 5 stocks concentrated and, have 20, 30, 40% of their account in one stock. I'm not going to do that. We have people from varying, financial situations who are invested here. I'm going to get more aggressive than I would otherwise in TAG and SIG. But we're not doing the, 30, 40% in and ride this thing and try to triple or quadruple the account at the end of the year. That's just not the way I'm going to be doing this. So, okay. So CRDO, I want to talk about that one. Uber. I'm watching it. There's a lot of bullish sentiment out there in Uber, but what I'm seeing in Uber is like, I almost see a little head and shoulders action here. This one's making me nervous. So if we kind of do a little left shoulder, head, right shoulder, and we break below the trend line here, I guess this would be the neckline. Let me redraw that properly. Connect there, and yeah, that's good right there. So if you start breaking through 88.90, I am going to be a little concerned, actually a lot concerned on Uber. Uber, we are up 16.94%. It's a 3.78% allocation in Uber, so not huge, but I certainly want to protect that. I will be increasing my mental stop. I don't place physical stops because I'm watching this all the time. I am not trying to I'm not trying to be so perfect on the entries and so tight on the exits. I'm trying to let the market breathe a little bit because I do think we're continuing to be in a secular bull market, notwithstanding the analysis I did on the open with that, ascending triangle, ending diagonal kind of pattern based on the LA theory. If that starts to manifest, I'm going to put some hedges on and reduce the cash that we hold, of course. All right. Another thing is we added Amazon. This company is just firing on all cylinders. You just look at, the downtrend here on the weekly. We're trying to break through trend line resistance. You do a 1272 extension of the drop that we saw in the beginning of 25. We messed around the 786 for a while. And if you don't stop at 786, you're probably not only going through the double top, but up to the 1272. And those of you who are math geeks, right? You guys all know the 618 Fibonacci retracement, right? If you get out your calculators and do the square root of 0.618, it would be 1272. Square root of 0.618 is 786. Square root of 1.618 is 1272. So it's the square root of the two Fibonacci ratios. For some wacky reason, they work really well. 786 to 1272. Okay, so that's all the way up at 270 at Amazon. And we could talk about the fundamentals another time here. One more stock that I want to talk about is one that not a lot of people are talking about is Life 360. My kids now have phones, and I heard from multiple people that Life 360 is like what you have to get. It's the best way to keep track of your kids, speeds they're going in other parents' cars. They have a nice moat. They're protected from Apple coming in and displacing them and just creating the technology themselves. The stock is trading at crazy valuation. The revenues are there. We're starting to see some analyst upgrades, but you look at the technicals, this thing is just absolutely ripping. So here's Life 360, symbol LIF. We've been holding this guy, LIF. Where are you? We're long from 68.96. We're up 35% on this one, 68. So our entry was right about there. Not the best entry right here. We should have been. I really just found the stock after it broke from this consolidation. But if you look at where this thing's going, 2023, they turned profitable in 23. They lost 20 cents gap in 2022. 23, they made 20 cents. 2024, they made 62 cents, which is a 209%. They're looking to be gap down this year, but non-gap, the growth is going to be there. There's some business-specific items going on, but then in 2026, they're looking to regrowth their growth, regain their growth trajectory is what I'm saying. So if we kind of look at some of the levels here, so the forward P is just absolutely insane. 16 cents as percent of 93. So whatever that is, and then 65 cents into 93.44 is going to give you that. So what's that going to be? That's your forward P there. It's crazy. But if you look at some of the analyst upgrades here on LIF, look at Benzinga here. These are all upgrades August 12th after earnings. So Stiefel put on a buy with a target of 87. Evercore raises to outperform for 55. UBS buy at 71. And then Canaccord, Genuity up to 86. We're trading 94.93. Okay. So, we're getting a little overvalued here. If we look at over here on ticker, the target, the analyst's target price on the mean is 94. The median, I didn't mean to do that. The mean analyst price 94. The median is 95. Street high is 100. Street low is 85. And there's 7 buys one outperform, no holds. Let's see what's below this here. Yeah. Okay. So, the street high is at 100. We're at 93. Let me look at this. Let's go over to analyst estimates. So let's look at LIF, make sure we're there. Yep. Okay, so let's scale this over the last couple of years. So here's revenue growth, and you can scale that up as well. Okay, so 23, 24, 25, you can see the steady, revenue growth there as well. There should be somewhere I can put the labels on there. Show labels. There you go. Yeah. So 587, 706, 757, 834. So this is going to be this year, just under $500 million in revenue, going up to 587. I wanted to look at the EPS though, GAAP and non-GAAP. Yeah. So EPS for 2025 is expected to be GAAP 28 cents. So according to Ticker, they're expected to go profitable this year. Yes, 28 cents. Depends on where you look. According to DeepView, I know it's probably pretty small for you. DeepView, their data says the expectations are for 16 cents this year. That's GAAP. And then over here on Ticker, 28 cents. And then non-GAAP, EPS normalized, is 86 cents. Looking to go $1.22 in 2026, $1.88. So you can see that 38, 42, 54% EPS growth. So yeah, let's go. Let's say we do a $1.22, stocks trading 934. What's that valuation? 93.44 divided. The only thing I miss is that calculator app in Windows. What did I say? $1.22, 1.22. So that's still 76 times forward 2026 non-GAAP earnings. The valuation is really, really high. Combined with, the analyst upgrades and everyone, we'll see if there's more upgrades coming. I've done, some pretty good research on this company. Again, they're pretty insulated from attacks on Apple. They're moving into various deals. They did a deal with Uber. When you arrive at the airport, Uber, immediately connects with you and you need a ride. And like the market is discounting them growing into other fields and other areas that they, hopefully will execute on as well as they did with location tracking. Like my wife and I use it all the time. It's really pretty cool the way it works. So I'm going to be watching this stock, but I mean, obviously this thing, is closing right up in the highs. There wasn't any real news that I saw. The volume wasn't significant on Friday, but we have certainly seen some pretty significant volume accumulations there. So, it's a new stock. I have data just back to 24 here. So there's not a lot to work on with the technicals. So it's something we're going to watch. Okay. All right. I think that's pretty good for the first Active Ops video. We'll get that out. And yeah, we'll leave it there. Be sure to check us out. We do a live stream on Thursday, more macro, fundamental, talking about our longer term portfolio approach. And how are the Yankees doing? I'm afraid to look. They got rocked last night by Toronto, and it's playoff. We're coming in for the wild card, so they're not showing the score yet. Oh, 2-0 Yanks, bottom of the third. There you go, boys. All right, we're going to leave it there. Have a good weekend, guys. Take care.